So there's a lot of buzz around Nova Scotia and the first-time homebuyer program pilot, but I would say there's a lot of confusion, especially around the down payment, the qualification rules, and the phase government guarantee. But you know what we're going to do today? We're going to break it all down, and thank God you're here.
Well, appreciate the invite, I really do.
Well, could you introduce yourself?
Yes, I'm Mike Caron. I work for CUA, which is Credit Union Atlantic here in Halifax, and I'm the Director of Member Services Support. And I've been in mortgages for my entire career, which is a long time.
So if we're going to just dumb it down, keep it simple, stupid, who's the program for? Is it just for anybody, any first-time home buyer, or what's the deal?
No, not really. This is designed for people who are struggling to really save the 5% down payment.
Yeah.
And also those people who are paying high rents because they're in a position that they could probably pay a mortgage payment. But the biggest struggle is if you've got high rents and you've got a car payment, you've got a line of credit and a credit card, a student loan, that kind of thing, then where's the room to be able to save that 5%, and how long is it going to take?
It could take forever and a day.
Yeah, and plus the closing costs and all the little extra things that come along with buying a home. So this is the design with the Nova Scotia government to help younger people. And look, we've had a few applications already, and there's people in their 40s and 50s that are doing this as well.
I think it's wonderful. Yeah. And, it's not for everybody, but, you get the keyboard warriors on social media and, the taxpayers, are paying for this, or what does the government guarantee actually really mean?
So that's good that you asked that question, because I'm going to I'll actually read the actual, what exactly they are guaranteeing, because, and then I'll put it into layman's term.
Yeah.
Okay, so I've got it in here somewhere. Just a second, I just got to locate it. So government guarantee, you've got it. Okay, so in the event a borrower defaults on a mortgage loan, the guarantee covers 90% of the deficiency defined as the net outstanding principal and interest owing on a mortgage, less the proceeds realized on loan security mortgage following the sale of the property. So, layman's terms.
Yes, please.
Okay, because what most people think is, it's a government guaranteed thing, or taxpayers are going to be paying this. But when you think about it, and you buy a house for a market value, and you live in it, and let's just say we know that things happen, whether it's domestic or whether it's job loss or whatever, those kind of things do happen. So if they're 4 or 5 years into this and they have to put their home up for sale, and then, so they put their home up for sale, and hopefully they bought a home that wasn't overpriced. And so they put it up for sale, they sell the house, the mortgage gets paid off. Mm-hmm. Hopefully the full mortgage gets paid off, but if there's a residual of the mortgage that's paid off, that's what the government guarantees. But they don't cover legal costs. They don't cover any real estate fees or anything like that. So let's just assume it was a $500,000 house.
Yeah.
If they sell it for $500,000, let's say 3 or 4 or 5 years down the road, chances are very good that they're going to pay off the full mortgage, and the government's not going to be laid with any debt whatsoever, any concern at all. So a lot of people think that this is like the insurance, the high ratio insurance program, where they're paying an insurance. And CMHC, by the way, is a government organization. We also have Sagen and Canada Guarantee, which are not government, but they pay a premium. So if you buy a house with 5% down, then CMHC or Sagen, they're going to guarantee the financial institution the property as far as the sale is concerned. But they take care of the whole balance, so the bank doesn't have to worry about it. So they take care of everything, and so so that means that if you have to file an insurance claim, it's CMHC that is taking care of that. So
different question, same topic. So let's say I bought the house at $500,000. Next year it's worth $520,000. Mm-hmm. I lose my job. Mm-hmm. I'm forced to sell the house. Mm-hmm. You have to get paid back the $500,000 or whatever the mortgage is. Is there plus interest on that?
Yeah, there's going to be an interest rate, obviously. So they're paying a principal and interest payment
Yep.
on a regular basis. So the balance is going to go down, but after 3 or 4 years, it's not going to be gone down significantly on a 25-year amortization. But the fact is that if you sold it for 520, it's going to be able to take care of the balance.
Right, and if, let's say if I did, because I had to sell because I was going to be in default or whatever, would there ever be any money left over for me if I had everything else paid out? Okay.
Absolutely.
So, okay,
Yeah,
so...
it's not like they're losing their equity. So if they sell it before, like if they make the decision, look, things aren't going great, I'm in a domestic situation, I lost my job, I'm going to sell it, regular market pricing, usually 90 days, shall we say, right?
Ish, yeah.
90 days-ish. So they sell it within the 90-day period, then it's their home. We don't own it, so it's their home. They keep the equity.
It's pretty safe.
I think it's really safe, and I really don't see why there was a lot of negativity. I think there was some negativity from the brokers because of the fact, and we'll get into this as far as the renewal is concerned, because this is a conventional mortgage. Financial institutions will only invest up to 80% of the value of a property. So obviously, if they're only putting 2% down, that's 98%. So let's say, for instance, in 5 years' time, then they may not be at an equity position of 80% loan-to-value ratio, which means the only place they can renew is with the same lender, so with the credit union. So, meaning there's some restraints to the individual. The individual has to stay with that lender, so they can't transfer it out. And then, of course, the brokers, and all due respect to the brokers, they get an opportunity every 5 years to be able to move that mortgage to another financial institution and, of course, make more money as well.
Well, of course, but I mean, it is what it is.
But it is for and I know the majority of the brokers that I deal with, they're looking out for the client, and they are taking care of the client. So they go to their clients and say, look, I can probably get you a better interest rate at this point. And then there was some concern about what the interest rate was going to be. And CUA is charging 4.99%, which is a bit above market. However,
but there's a price to pay.
Exactly.
If you want to have the program.
Yeah.
Right. And so I believe in the program, and I think it's another alternative towards home ownership, especially for a first-time buyer. And again, like student debt and everything else, and if you have good credit, it's just hard to save.
Yeah.
But why only? How many is it? Like 650 mortgages.
650 mortgages over a 4-year pilot.
Because it's a great program.
Yeah. Well, it's just a pilot program, and really that's designed to do evaluation, make sure that the risk management is working out, and that there's reasonable use of public funds. I think it's going to be very successful, and it will be extended. So it started in February. We've done 5 deals so far, 5 pre-approvals, and we can get into that. But I really believe that everybody should get pre-approved in advance, because I know as a real estate agent, the most frustrating thing for you would be these people, I got a pre-approval and said that I can buy up to X amount of dollars. Okay, let's get in the car and start looking at houses. Well, pre-approvals are only good if they're actual strong pre-approvals. In other words, we will not give a pre-approval until we've got income confirmation and confirmation of down payment. The only conditions that will be after that pre-approval are the appraisal and the purchase and sale agreement, and that's it. So as long as they've got that, you say, yes, you're good, in HRM and East Hants, it's up to $570,000. So you're good for 570, or good for 500, or good for 450, whatever it is. Then get in the car with a real estate agent and let's go see some houses, or virtually.
Yeah. So and they're the pre-approval good for 3
90
months?
days.
90 days.
Yep.
As a listing agent, I want a piece of paper.
Yes.
Are you giving
Absolutely.
that?
Yeah.
Okay, because I will ask for that.
It comes directly from. So this is sponsored. This is taken care of by the Nova Scotia government as far as the approval or the guarantee. But Atlantic Central, who is kind of our mothership as far as the credit unions are concerned, they're the ones that do all the approvals. So I can make the recommendation to Atlantic Central, but I can't do the approval. But they'll issue an approval letter or pre-approval letter as soon as it's pre-approved, which I can share with a real estate agent or with a client.
So that's great. And so I know the frustrating part for me when they had the other program for first-time home buyers, and it was taking 21 days to get approved. And so being who I am, I'm like, I am not
get
taking my
moving.
seller's home
Yep.
off the market for 21 days while you try to figure this out.
Yeah.
So I'm going to leave the house for sale
Yeah.
and give you first right of refusal.
So it's always better that they get the pre-approval first, because then the next document. Now, appraisals can take, and an appraisal
I
is
know,
required
that's
every time.
different. Yeah.
So an appraisal is required every time. So we'll have to get on appraisers. Like we've got a few choice appraisers that can move really quickly.
Okay, good.
So I'd pick up the telephone and call a certain person and say, Kate, I need this done as quickly as possible. And so she's got a team that works very quickly. And so I get the appraisals pretty quick. And as soon as I get it into Atlantic Central with the purchase and sale agreement, they're within 24 hours. So hopefully the appraisal, if it's quick, then we can get it done within the first, like the 10 days that you would normally have for financing.
Okay, so
However, there might be, just a warning, there might be, if there's a delay in the appraisal, could be a couple of days that you have to extend.
Well, I mean, and that's normal for
Sure.
a regular mortgage. So, you know, back in the day, a $500,000 home was a palace. Because I remember when I started off in 2011, $265,000 was the average. And if you were getting a $500,000 home, wow.
Yeah, exactly.
But now, you know, here we are 16 years later,
Yep.
and the market has changed significantly. And a $500,000 house potentially may need some upgrades,
Yep.
right? Hypothetically speaking. So I know with regular mortgage brokers that I deal with, I have the purchase plus improvements. Can I do that with you?
Unfortunately, not with this program.
No.
They've decided that they're not going to do a purchase plus improvements. And that's too bad. It really
Yes,
is too bad.
because some of the houses are going to need it, right?
Yeah, and we thought at first that was definitely going to be the case, and it's still something that we're lobbying for. And
What do you think the hesitation is?
I don't know. I really don't.
Okay.
And it is a bit of an anomaly, because there's all kinds of homes in certain markets that maybe they're a little tired.
Yeah.
And, you know, or maybe they're 70s, they're 60s or whatever, and they just haven't had the upgrades. And so, you know how kitchens and bathrooms really make a difference. And so you could take a look at a home like you could with your experience and say, you know, this is a great home. It needs some lipstick, right?
Yes.
So, and it's going to need some upgrades. And so whether it's flooring or the kitchen or bathrooms, that kind of thing. So that can take some money, obviously. So it's a bit disappointing that that's not the case,
'Cause
but we're
initially
still
you thought
lobbying.
so. Okay,
I did.
good.
Yeah.
Oh, good. I'm
We're
glad.
lobbying for it. We really are. I was a bit surprised that didn't come across, but we're going to continue to lobby for it. And you know, this again is a pilot project. So you know, one of the things that we saw here just recently was there was a decline on a file, and there was nothing wrong with the file. The people were fantastic, but they saved too much money. So they qualified for they could have gotten a regular mortgage in the regular market. So 5% down with high ratio insurance. And so we've lobbied back to them to say, okay, but wait now, because you can go 2 to 4%. And so they had 10% available. And I said, you know, closing costs are going to be at least 2%, right? So you get 5, now you're at 7.
Moving.
Right, okay, moving, and maybe they want to do a little bit of, they got to buy some furniture or whatever. So we don't want to leave these people completely with no savings at all. And so they're taking that into account. And so I think that needle might move as well. So we're appealing it and saying, okay, well, maybe instead of 2% down, let's do 3 or 4%, something along that lines. Because it is 2 to 4%, so it's for individuals. It's designed to help people who cannot normally afford or get into the market on the regular basis right now. So,
Just a few questions about the scenario. So, but if I have 10% down, would I have used your program because I want to still have some more money in the bank?
Yeah,
I didn't want to, you know.
yeah, the money could have been earmarked for something else. Could have been earmarked for, could have been furniture. It could have been a little bit of renovations. It could be just for retirement. So,
Yes.
you know, to us, it was like, okay, well, wait now, let's just double check on this. So we're going to appeal it, but these individuals could actually get into the market with a 5% down at this point. So we'll
That's
see.
really interesting.
Yeah, I found it interesting too because I went to my adjudicator and I said, so what have we got before I came here? What have we got so far? So we've had 6 deals, 5 have been pre-approved, or 4 have been pre-approved, one's just in the works, and 1 was declined. And I said, why was it declined? They have too much money.
That's crazy.
Yeah.
So if I am a buyer and I'm walking into the branch, what do I need with me when I go in?
Bring your income verification and your confirmation of down payment. And so income verification, if you're in self-employed, bring 2 years of T1 generals and your NOA, your most recent NOA, to prove that you don't owe money to CRA. If you're self-employed, if you are doing a regular job, then a job letter and 2 pay stubs is going to be fine.
So
recent pay stubs.
You're doing the background check at Equifax and all those things
We
as well.
take care of all that. That's all done.
From a regular mortgage that you guys would have done, is there much of a difference of the process to go through apart
Qualification?
from? Yeah.
Okay. So this is a little bit different. I actually thought that a 630 FICO score is the lowest that they'll go, which is good because normally 650 was a threshold kind of. So it does give individuals who have a little bit lower. In a lot of cases, people have a 630 FICO score, not because they're not making their payments, but maybe they're maxed out a little bit.
Yes.
And it could just take 2 credit cards that they're maxed out on, and it's not really that big of a deal. They're still making their payments. So the 630 FICO score. The other thing is it's 35% gross debt service ratio and 40% total debt service ratio. So that's a little lower than normal. I actually do like that because CMHC and Sagen and Canada Guarantee is 39.44. So 39% is your housing costs. So if you think about that, you're 39% of your gross income, which, as we know, gross incomes are gross, but they're not. When you're taking that money home, it's a big difference, right?
Yeah.
So if almost 40% of your income is going out on housing costs, you're close to house poor. So, and then the other 4% or 5% is for a car payment and a line of credit and what have you. So 35% of your gross income is going out on housing costs. So housing costs is principal, interest, taxes, and heat. So that's their limit. That's what they want to do. And I think that's a good thing. It wasn't that long ago that it was 35-40 in the industry. And it's because of the costs that continue to creep up. So
with the fiasco that's happened with Nova Scotia Power and all of the the bills being out of whack, is that going to have any effect on the program?
We haven't seen it yet. Usually with the power and the heat, that kind of thing, we're pretty flexible on that. A lot of the financial institutions will just use $100, and we all know that $100 a month doesn't heat anything.
No.
But if CMHC and Sagen will accept that, then we tend to use that in those cases. And the taxes, of course, taxes are continuing to go up, and so now you're seeing people having to pay taxes on basically an old car payment, $300, $400 a month at this point. So everything gets affected. There's no question. I mean, costs are higher. But what I was impressed with is I saw some of the files that I've looked at. And, there was a property over in Cole Harbour. It was an older property, but it was in really good shape, great bones. And it was $450,000 around there. I think it was $410 to $450. I can't remember exactly. And I was a bit surprised. And it was single family. It wasn't a townhouse or a semi. So there are some homes out there that are priced in HRM that they can get into this program. Because I heard a lot of people saying that 570 wasn't enough for HRM.
I think it is enough.
I think it is too.
And so not only...
And remember, it's a starter home in most cases, right?
So before I talk about the starter, okay, I got to write that down because I got a mind like a sieve.
Yeah, me too.
Type of home. Is there, when you look at the debt service ratio and all that kind of stuff, and you look at what the taxes are for that particular owner, it's a definite sticker shock.
Yeah.
When the following taxes come in.
Yeah.
So how are they?
How are they managing?
No, but how do banks manage that when okay, it says that the owner right now is only paying they're capped at 500,000,
Sure. Yeah.
right?
Yeah.
And now the house is worth X, and
Yeah.
I am going from, let's say, $6,000 a year taxes to maybe 10,000.
Yeah.
Like,
Well, it's happened a fair bit, and then individuals have rethought whether or not, like the people who are currently in mortgages and, they get their properties reassessed, they've rethought whether or not they should be in a home like this at this point, because taxes continue to go up, and it's really too bad.
I know, it's too bad.
Because I see it in our home. We bought our home in 2010 for just under $400,000, which was a fair amount of business.
That's a lot back then.
Exactly. And now it's worth over 800, and the taxes have gone from, what was it, 3,000 at the time, and it's over 6,000 now. So a lot of people say, well, yeah, I know, but it's a beautiful home, blah, blah, blah. It doesn't matter. People have affordability, and that's all there is to it. They have, the more expensive it gets, the harder it does get. So,
yep. So I made you go off topic, but back to the topic, and we're looking, for the program, and we're talking about, affordable homes. But I've been into some condos that are under 500,000, and they're beautiful.
Yep.
And some of the parks, they're gorgeous
So that's
when
it.
you walk in. So. We can't have the Taj Mahal in the beginning.
No, exactly.
But why not? Can I use this program for one of those products?
You can use it for manufactured homes. You can use it in a park as well. And so mobile home.
Even if they don't own the land.
Even if they don't own the land, I was a bit surprised to see that. But yeah, it's on the leased program, leased land as well. So, and we know that the manufactured home, and it's interesting because I'm dealing with this on a policy issue right now. Manufactured homes, let's say in the 70s and the 80s, yeah, okay, they were trailers, right?
Yeah.
We can say that they were trailers, and that probably the value or the quality wasn't extremely high. But it got people into their homes.
Absolutely.
So today, in the manufactured home business, the quality is superior, and it's gone significantly. And as a matter of fact, I know a lot of people that are buying a piece of land maybe outside of HRM or in HRM, but in a more rural area. And instead of building their own home, they're just ordering a home.
Oh, I think it's great.
Yeah, and it just, so they have bungalows, they have all kinds of different types of homes.
I've been in several of them, and they're beautiful.
And they're lovely, and they put them on a slab as opposed to having a full basement, which, as you know, basements can be a problem.
Yep.
So I think it's fantastic. So they are, condos are available as well. So they're not limiting.
Can I use the program to buy the land, then put something on it?
If it is all in one contract.
Okay.
So almost like a turnkey. So in other words, it can't be a construction mortgage. So for instance, if you're buying a piece of land and now I'm going to construct this home, no, can't do that. And then they do, of course, we do construction mortgages at CUA all day long. And so and we do them on advances, right? But that's not available in this program. But if you went to a builder, and it happens with, some of the manufacturers, the manufacturer home companies, they may have land, and they say, you know what, we'll offer a full package, and it'll drop. And so they're allowed to do, I believe it's 2 draws, but I have to double check. So the first draw generally is for the excavation and get all that completed, and then the second draw is to drop the home and get, the cupboards and electrical and plumbing all taken care of. So
how come we're not hearing more?
I don't know
of this?
It came out as a big storm.
Yes, and then gone.
Yeah, and then gone. And I think it's we're seeing a lot of people come into the branch, and I want to get to a point where we start talking about this more, and I know at CUA we're going to be talking about it a lot more. I think everybody is kind of dipping their toes in right now, and I think, when you hear government guarantee, for whatever reason, without reading the fine print, people get a little negative. But read the fine print, because I think this is a pretty good program.
No, I'm with you. I just want to go back to the mortgage broker sector. So if my mortgage broker is with, the mortgage center, can they still get the program for me, or I got to go through you?
No, you can go to the mortgage. If you're dealing with a mortgage broker, get your clients over there. And I'd be more than happy to talk to the mortgage brokers. We are doing it with the mortgage brokers, and we are paying them a commission.
Okay, good.
Yeah.
So it's a win-win.
It is. Yeah, absolutely. Now, the mortgage brokers, because I've had mortgage brokers come to me and say, well, I want to talk about the program. And I said, absolutely. Let's talk about the program. And then they just kind of die off a little bit, and I don't get an opportunity to talk about them. We got a mortgage mixer coming up in April, and I can guarantee you that this is going to be high on the topic. And we're going to talk to mortgage brokers and say, you know, you've got all kinds of clients out there with just a little bit, they're this far away from being able to afford a house, and they want to afford a house. And so get out there and start talking to your clients. And in particular, the mortgage brokers that have been around for a while, and I know a fair bit of them, and they're dealing with their kids now, right?
Yes.
And in some cases, the grandkids. So, their kids are probably still living with them. And don't you want to kick those kids out of your house? So,
true story.
Help them buy a house.
What if I am a first-time buyer, but I want to buy an investment property? I want to buy the property and rent it. I guess it doesn't matter?
It's not for rental properties. It's got to be single family, and it has to be owner-occupied.
How are you going to know that it's owner-occupied? Just, I guess, for the deed?
There is a declaration that has to be signed.
Okay.
The long and short of it is, it's not designed for investment properties. It really is not. It has to be, and the other thing is you have to be a first-time home buyer. So let's just talk about, as far as what do they consider a first-time home buyer? So an individual who has never acquired ownership of a dwelling in Canada by way of purchase, inheritance, or gift. Or an individual who has previously owned a home, but has gone through a marriage breakdown or a common law relationship breakdown. Or an individual who has not occupied a home that either they or their current spouse or common law partner owned in the last 4 years.
Oh.
So, first-time home buyer, you haven't owned a house for 4 years, but you owned one before. So they're now considering that as a first-time home buyer. So I think it kind of opens up the opportunity to more people. Whereas if it was just, once upon a time, it was a first-time home buyer and that's all there is to it, and you could never have owned a home. But in this case, it could be a domestic situation, or it could be that you're with somebody and you haven't owned a home for at least 4 years.
So my boyfriend owns a home, I'm living with him, we're common law.
Yeah.
And we break up, I want to go buy a home. I can? Because what I heard there is I couldn't.
It says, or an individual who has previously owned a home but has gone through a breakdown of marriage or common law relationship. So that person that broke up with and they separated now has gone through that breakup of marriage or common law, which means, yes, they can.
Even if my name is on the deed?
Yes, because it's a breakup. So in a lot of cases, what they do is one of them gets bought out, right?
Yeah.
So for instance, if there is a breakup, we see it all the time. We're doing refinances to buy out the other individual. So it does say right here, and I've read it several times.
I know you did your notes.
Okay, and an individual has previously owned a home, but has gone through a breakdown of the marriage or common law relationship. So they're not on the deed now, okay? They went through a breakup. They're not on the deed now, so they don't own a home, but they've gone through the breakup.
It's so great.
It is good. So, there's some opportunity here for sure, I really believe. So
this needs to be celebrated more.
Yes, I think so too.
So would that be on, our new minister to get that done, or who is this on?
Well, I think first off, we've got a job to do as far as the credit unions are concerned. And
yeah.
I know that we are definitely going to do the job. CUA is very, very heavily involved in social media. So we're going to make sure that that's out there. So I think we've got a job to do. I think that, Atlantic Central probably has a bit of a job to do because they're kind of the, custodians of this.
Yeah.
And so they need to get this message out as well. And I think the rest of the credit unions are definitely going to do that as well. So
Oh, wonderful.
Yeah.
I think we covered everything, didn't we?
I think so.
Yeah,
Absolutely.
no, I think it's a great program.
Yep.
So the takeaway here is that it's not everybody's option, but it's a great option if
It
you need
is.
something and if you have good credit.
Yeah, absolutely. And still I think that there's great options as far as even the credit. When I looked at the credit score 630, I thought, okay, that's a little bit low. However, like I've seen lots of people with a lower credit score in 630 to 650 that have good credit. They just, for whatever reason, their score is a little bit lower. Maybe it's inquiries, maybe it's they're maxed out a little bit. So I like this opportunity. And I think that more people need to talk about it. I think more real estate agents need to talk about it.
Well, maybe you should have some agents at your mortgage mixer.
Well, we invite real estate agents as well. And you'll definitely be on the invite list for sure.
There you go.
And we'll make sure that real estate agents are aware of this. And, we get a lot of mortgage brokers that come out because they deal with us. We have alternative lending. We're not the major financial institutions the way that, but we've got alternative products. Like the first time, this product is definitely, we also have the no down payment mortgage. The no down payment mortgage is our product. And we're working on some things to make this a little bit easier. One of the things that you have to understand too is that individuals have to qualify still for the stress test, right?
Yeah.
So, we're working with, I know that financial institutions are working with the government constantly to try to relieve that stress test a little bit.
But it's a good thing to have, though.
It is, there's no question.
Painful, but good.
Yeah, there are some people that get into a point where it's difficult for them to qualify at 7 or 8%. But it is good because we never know, and especially in today's world, we have no idea what's going to happen. We just don't have a crystal ball. And we've seen higher interest rates, we've seen lower interest rates, and we don't want to put people into a position where they are going to be house poor, and then the market goes to crap.
Well, and that can happen in a
heartbeat, and you know that.
Yeah.
Because if it wasn't for, it's so interesting what happened with the market after COVID. Nobody ever would have predicted that homes were going to go up by 50% in value.
No.
And then there was a super high for a while, and I'm sure you were involved with it. It must have been difficult on real estate agents where, you'd go in and you'd have an offer, and you'd think it's a really good offer, and it's over asking, and the next thing you know, other people are coming with higher offers.
Yeah.
So that must have been really tough. People said at that time that real estate agents are just making gangbusters. And I thought, well, yeah, if their offer is accepted,
yes.
but
or it goes through. Because right
Yeah.
now, I think 10 to 15% of the deals that are being written now are terminated.
Yeah. Well, and that's why it's so important to get pre-approved.
No, I agree. I
Yeah.
agree.
Yeah.
Well, thank you for coming out again
Thank you,
today.
Sandra.
And
Appreciate
if there's any other changes or whatnot, we should get together again. Again, I think it's a great program.
Yeah. And you know what? Again, pilot program, 4 years, 650 mortgages. That's a test. Okay. I see this as going well. And I see that if the government's going to see that this is going well, that they're going to extend it. So.
Makes sense.
Yeah.
Thank you so much.
Okay. Thank you.